Hello and welcome to Morningstar. I'm Emma Wall, and here with me today to discuss the significant changes at Alliance Trust is Senior Fund Analyst David Holder. Hi David.
Hello Emma.
So I think it would be worth having a quick recap of the last year for Alliance Trust because there has been, as I said, significant changes.
There have been significant changes at Alliance Trust. It seems like there's been significant changes at Alliance Trust for ages and ages, actually. However, if we sort of just rewind to Q1 2016, the board was refreshed, a new chairman was appointed, and since May 2016, the chairman of the board have embarked upon a sort of consultation process, a review of the strategy of the company, and just recently in mid-December have acknowledged and put forward their suggestions for how the company should be managed going forward.
And this sort of a consultation process has culminated in the splitting of assets which the Alliance Trust investments portion of the company was running. And some of it has been sold to Lion Trust, and the other of it will be outsourced, will it not?
Well, indeed. So the Alliance Trust plc have come to an arrangement with Lion Trust to sell to Lion Trust, Alliance Trust Investments, ATI. ATI were the investment arm of Alliance Trust plc, and so therefore Alliance Trust plc will no longer have investment capability itself, and so what it's looking to do now is to outsource that investment capability to a third party.
And so for shareholders of the trust itself, Alliance Trust, who will then be running that fund?
Well, the board are proposing that the trust assets are managed by Willis Towers Watson, who are an investment advisor. And at the moment, details are a little scarce. However, we understand that Willis Towers Watson will suggest a number of global investment managers, and those portfolios will be sort of knitted together to create a portfolio. So there'll be around sort of 8 to 10 to 12 different global managers running concentrated portfolios, as we understand it. So maybe 20 stocks in each portfolio. And those will form the basis, the majority of the basis of the trust assets going forward.
Now, this sounds like an 100% turnover or churn of assets within Alliance Trust, which means significant cost to shareholders potentially.
Quite possibly, inevitably, there will be cost to shareholders in terms of legal administration charges and the such like, and also there'll be trading costs also incurred. At the moment, we don't know what the implications of those costs will be, but going forward, I think that Willis Towers Watson will be running a portfolio at reasonable cost, and the figure that we hear is around 60 basis points a year, which we think is reasonable value for an actively managed global portfolio.
And are there any trusts like this on the market? Because it's very different from what it was doing before, and indeed the proposal has caused it differentiated as well. The proposal has called it differentiated,
and somewhat it is differentiated. Witten Investment Trust does something fairly similar, although there are a greater number of stocks within the Witten portfolio, probably around twice as many as the 200 or so that we would expect to see once the portfolio has been rebalanced at Alliance Trust plc. So yes, it does have some elements of differentiation.
David, thank you very much.
No problem.
This is Emma Wall for Morningstar. Thank you for watching.